This is Michael Good from ReaperTrades.com with another watch list watching for Wednesday, August 26, 2009. What you see before you is the chart of Vonage, and it's also known as stupid voice over IP phone company that loses lots of money. Ticker symbol VG. Now, it opened the day under 70 cents. Sorry, that's not the open, that's pre-market trading. It opened the day just under 70 cents. Closed the day around $1.60, and in after hours trading it went all the way up to a high of about $2.60 and is around $2.20. Now, before I go on to talk about why this is on watch for short, take a look at this. When it crossed the magical round number of $1 per share, it never once touched it again. So if you had bought on the round number cross, you would have made a bunch of money. Same here, even when it crossed $1.50. Well, a lot of this trading is after hours because it's so liquid today, 40 million shares traded today. It's still representative. One thing I like to talk about is, especially with these penny stocks, people fixate on round numbers. So if a stock breaks a round number, that has a lot of psychological importance, and it can be good to trade around those numbers. Now, looking at this from a short perspective, Vonage was on my watch list last night as a potential short. Anything that's a potential short in my book can also be a potential long if it shows strength, because stocks that have spiked on high volume and have made huge moves can make even huger moves, if you'll pardon my English. So, while I didn't look to buy this today, it would have been a very easy thing to buy, say around $1, or even when it showed strength early in the morning, say around 75 cents or so, right out of the gate. Now, let's bring up the multi-day chart. Here, these are daily candles. And you can see it's gone from 50 cents to $1.60, and keep in mind that's about $2.20 after hours in just 2 days. And it's never been anywhere near $1.60 in the last few months. In fact, if we look at the weekly candles, you can see that it hasn't been anywhere near there since early 2008. If you look for 220, you see it hasn't been near there since the very beginning of 2008 or before 2008. Now, you see how this is a weekly chart, keep in mind. So each of these candles is 1 week's worth of trading. But see how for a long time it was in a range between $2.25 and $1.75. So that will tend to be resistance. I'll explain that more in another video, but I can't do it justice here. But what that means is if it can break through that, it may go more. But considering how far it's run already, I doubt it. And considering also that this run-up is based on no significant news, I doubt it. What's possible and what I expect to happen is I expect it to open up tomorrow. Let's go back to the daily candlesticks. I expect it to open up tomorrow. Well, this is actually better shown on weeklies. Please bear with me. I'm indecisive. I expect it to open tomorrow above 2, quickly spike up to maybe 220, and then I expect it to quickly fade below 2. And that would be a nice point to short when it fades below its open and starts to fill the gap, or when it fades below, when it just looks like it's fading. Now, I like to short stocks that are strong, but I only short them once their upward momentum starts to get halted. So I will not short this if it goes up a bunch tomorrow. I will short it if it looks weak and looks like it's turning over. I think this is a great short idea. Might not be tomorrow, might be the next day, might be a couple days from now. But I think it'll be a very good risk reward to short this when it looks weak, when it goes red on the day, or when it breaks below its open. So this is my only watch for tomorrow, and I'm going to be watching it hard. Keep in mind, it's a ton of volume, very liquid stock, so this is something you could put a bunch of money into if you wanted. So, good luck, good trading. See you next time.